Welcome back to StoneHouse Analytics. It's October 31st, 2025, and the markets are showing textbook smart money reversals. Gold and silver have bounced aggressively off major demand zones. Nasdaq continues to respect bullish structure, while both the pound and euro remain under pressure. Let's break it all down, pair by pair. Starting with the Nasdaq, it continues to hold strong around the 26,000 handle after clearing liquidity both above and below. The 4-hour bullish fair value gap remains intact, which shows us that smart money is actively defending positions right around that 25,900 level. So what's next? If we can hold above that level, the next obvious draw on liquidity sits around 26,250 to 26,350. However, a failure to hold could trigger a short-term rebalance down toward 25,750 before we see that bullish continuation. For now, the bias remains a bullish continuation, but be mindful of that potential for a controlled retracement. Now let's look at gold. It gave us a perfect rebound from the daily bullish fair value gap between 3,920 and 3,940, showing clear displacement as it powered through the 4,000 mark. We've now tapped into the daily bearish fair value gap near 4,020. This is a critical area, suggesting that smart money could be mitigating some shorts before a potential next leg higher. The key level to watch is 3,980. If that holds as new demand, the next targets are up between 4,060 and 4,100. The bias here is for bullish continuation, but keep an eye out for potential profit taking near this 4,020 resistance. Silver followed a similar path, showing sharp follow-through as it rose from the 46.0 level all the way into the daily bearish fair value gap at 49.0 to 49.4. This zone is critical. It's where smart money will make a decision, either continue rebalancing higher or reject back down into the 47.8 support. A clean break above 49.5 would signal a continuation toward the 50.0 to 50.3 area, so our bias is bullish, but with that strong short-term resistance at 49.4 very much in play. Moving on to the forex majors, the euro showed some early strength, but it just couldn't sustain it. Price bounced from the 1.157 low, but the rejection we saw near 1.164 keeps the short-term structure firmly bearish. There's still some unmitigated inefficiency down at 1.153, so a sweep of that level could very well happen before we see any kind of strong bullish correction. The bias here remains a bearish continuation, targeting that 1.153 liquidity pool. The pound is in a similar heavily bearish state. After tapping the 4-hour bearish fair value gap around 1.326, price continued its descent to 1.314. Now this zone might act as some temporary support, but the overall smart money sentiment remains short biased unless we see a decisive reclaim of that 1.323 to 1.326 area. Our bias is for bearish continuation until that 1.31 to 1.312 liquidity is finally taken out. So to sum it all up, gold and silver are leading the smart money reversal narrative. Nasdaq is consolidating near its highs, while the euro and pound stay weak under pressure. The liquidity cleanup is almost complete, which is setting the stage perfectly for next week's macro expansion. Remember to trade patiently, always trust the structure, and wait for that displacement confirmation. This has been your StoneHouse Analytics Market Outlook for October 31st. Thanks for tuning in, and I'll see you in the next session.